Hello, Maverick traders. Welcome out to your currency recap. It's June 24th. Corey here with you. Let's jump in. We're always going to take a look at meaningful news, what is moving, where it's rotating. Certainly out of crypto, we're going to talk about that market and how it's getting slammed. And then setups as far as cryptocurrencies, pairs, what we're going to look for is putting strength, relative strength with relative weakness that makes sense, that has opportunity to continue.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today, as we look at broad markets, the question is the growth trade coming apart, and what does that mean for the risk on trade, which has been in effect? Well, why do I say the growth trade coming apart? Nvidia down 13% in the past 3 days. The QQQ, the NASDAQ 100, which has really led the charge, had a big exhaustion high, had a big expanded range candle at the top, the classic signs that we needed to back off, and I touched on that last week in this very update. Bitcoin has been falling apart. We've been bearish on that, had that in the bearish category. I think it continues lower, even though we've hit 60K. You probably get a little short-term bounce here, but ultimately I think we're going to 55K, 52K. Lower numbers are in the works. So that's all part of the growth trade. That's part of the momentum trade. The areas where it's new opportunity, new growth, new excitement, and we're seeing that come off, and that's usually a bad sign for kind of risk taking in general. Now, what could happen is you could see a rotation, just the same way that currencies, you might be rotating out of US dollars today and into euros. You can see it's slightly higher, pound slightly higher. Really, currency markets didn't move like the crypto markets did today, where there was a lot of volatility. Currencies didn't move, but what could happen in equities is simply you could go out of Nvidia and go into other stocks, right? The stock market generally doesn't have to go down as long as the money stays in stocks. But I worry, again, stocks are a higher risk, crypto is a higher risk asset versus bonds and other things. So that the risk on trade is certainly in jeopardy, and that means that when we're looking at currencies, we've got to be a little bit mindful of that when it comes to Aussie, CAD, Kiwi. Those are risk on currencies. We've got to be aware of that because the things that have been lagging, like Japanese yen and US dollar, if we are in fact moving into a risk off scenario, we're not there yet, but if we do, that would reverse. One would anticipate that money would flow back into these defensive currencies, and you'd probably have a big snapback rally in things like the Japanese yen because they're really stretched. So sort of like a rubber band, when it finally bounces, it's probably going to bounce violently and sharply higher. Crypto, like we said, is leading the charge to the downside. Oil has been strong recently, a nice bounce back recovery in the oil markets. Now, crypto is where the pain is being felt at the moment, down for multiple weeks in a row, essentially, and showing no signs of really stopping. So again, I think that is likely to continue, even though today looks like a little mini exhaustion, like you should bounce for maybe a few days. Ultimately, I do think lower prices will be in the works, and we'll look at some of those charts here in a bit. Now, as we look at equities, you'd say, well, this doesn't look too bad, but here's the thing. It's interesting. S&P 500 is down today and the last couple of days. If you were to look at RSP, which is the equal weighted S&P, it's up the last few days. So meaning most of stocks have been recovering a little bit in the last couple of days, but the S&P, which is not equally weighted, this is heavily weighted towards the high cap, large cap tech, right? Apple, Nvidia, Google, Amazon and so forth, that's where we've started to come off the last couple of days. And again, that's where the momentum had been. So for now, equities still look okay. We're just seeing rotation, but money staying in stocks. If you see RSP roll over, and this is falling more sharply than RSP, then we've got ourselves a problem. That means money is simply flowing out of equities overall. For the rest of this week, you can see tomorrow morning we've got CPI data out of Canada. We've got some consumer confidence. We've got CPI at night in Australia. New home sales here in the US on Wednesday. We get final GDP numbers for the quarter here in the US. Canada's got GDP on Friday morning. And then this one is, as far as the economic events, core PCE is an inflation gauge. It's something the Fed watches closely, and markets are still very much aware of the fact that the Fed is price dependent and data dependent and going to be looking at these types of things to see if prices are coming down. If inflation has come down a reasonable amount, they may start to cut rates, but not until then. Now, as we look at currencies, here's basically how I've got it looking, and you can see it's heavily weighted to the bearish side. Now, most of this is crypto. Bitcoin Cash, Litecoin, Ethereum, all more negative. Japanese yen, US dollar more on the weak side, and again, those are defensive. So this is a little bit of here's where the momentum has been, but on the stronger side, you've got things like Aussie, you've got CAD, which has been bouncing back with oil. You've got the British pound and euro, best performers today. So as we look at this, it's really a matter of what the next phase is for the markets, and I'm just frankly not sure. I wonder if the money's going to stay in equities and just rotate, so you get a little undoing of the momentum trade. That wouldn't be a problem, and you could see Aussie continue to perform. If we start to see all broader markets roll over and start to see that happen in aggressive fashion, then I'd really want to flip this on its head. There will come a day, and I don't think it's too far off, where we're going to be looking at Japanese yen as up 2, 3, 4% on the day type of bounce back rally. And that's not to say that it's going to recover long term, but you're getting to that point. So I'm a little cautious on the yen on the short side. Doing personally, if shorting the yen, do it in a little bit smaller sized positions, just knowing that there's a lot more risk. I like the US dollar. We talked about that chart where it's kind of stalled out at the top end of its range and still kind of stalled out there. As long as that starts to move lower here in the next couple of days, it should go all the way back down to the bottom end of the range. So let's look at a couple of charts here. Obviously, in the crypto markets is where the momentum is at the moment. There's not a lot of momentum in a lot of the currency pairs, but you can see Bitcoin Cash, BCHUSD, broken below the key level of support and just sharply, sharply lower. Now, here's why I said we've got a little bit of an exhaustion here. Big expanded range candle on an extended move. Back here, you had the breakdown candle. That's good. Here you have more of the exhaustion candle. That's kind of bad for the downtrend to continue. So expect a little bounce back for a day or two, and then it should resume that downward trend. Look at Bitcoin itself, plunging to the prior lows, big expanded range candle. This is where you should see a small bounce. And this chart intrigues me because ultimately what this looks like is an inverse cup. And one would anticipate that maybe now we get the handle portion. So as we map that out, we say 72,000 is the top of the cup, and down here we can see 60,000 is support. So the size of this inverse cup is 12,000. That's the size of it. Usually the handle is 30% the size of the cup. So how big will this bounce be? Well, it'll be about 30% of that number is where we would expect it to kind of bounce up and then stall out. Well, if we take 12,000 times zero point 0.3, that's 3,600. So what's 60,000 plus 3,600? It's 63,600. 63,600 is kind of the top end of that bounce range. That is an area just technically. If you can get a little bounce in the next few days and kind of move up towards 63.6 on Bitcoin, that's probably the next area where I would more aggressively initiate shorts, or if you're trading it in the futures markets, selling a Bitcoin future, that sort of idea, right around those levels, 63.6. So that's what I'm looking for. Again, I think we bounce temporarily and then ultimately plunge down, move into the mid 55,000s, move down to the low 55,000s, and then we'll see where we go from there. But I don't think it's too far off. So in short term, small bounce. I mean, that's a decent sized bounce, frankly, but a smallish bounce compared to the prior plunge, and then another move lower in the coming weeks that follow. As we look at markets, the currency markets are not really moving a lot. So my preferred area to look on the long side is Aussie. My preferred area to look more bearish is in crypto. If I had to put the Aussie against something, I like Aussie USD as the trade. I think that would be what I would go long, buy Aussie, you're short the US dollar, and that's a little safer area than the Japanese yen. That feels a little bit better to me just in terms of risk reward probability, because Japan has risk of currency intervention from the Bank of Japan. It has a lot of things that frankly probably won't work, and ultimately the Japanese yen will go lower, but it adds a layer of risk and a layer of potential gappy, sharp moves that I'm just not real comfortable with from a trading perspective in the short term. So I'd much rather Aussie USD on the long side. Hope you enjoyed the currency recap. Have a great week, everyone. We'll see you next time.